What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. All right, guys, so we had some pretty sweet price action today, especially the silver bullet setup that we hit in the Discord this morning. So these were the levels that I was looking at before the open. So we identified this high to have potential buy side liquidity right above it. And then we also had this fair value gap on the 1 hour and the sell side below. So I wanted to see a move into either this level and then displacement on the lower time frames, for instance, the 5 minute to the 1 minute in any one of those time frames, or to this level. But it seemed like because the draw on liquidity was to the downside, and we'll look at the weekly chart for that in a moment. Because the draw on liquidity was to the downside, I was basically anticipating at the open a move into the buy side liquidity and potentially into this fair value gap, and then a move to the downside. And then this is in my time, so this was 20 past 10 New York time. So this was the silver bullet setup that presented itself. So I'm going to go through the rules as well for the silver bullet, and I'll outline exactly everything that I look for before I enter a silver bullet setup. So right here, as you can see here, we had the buy side that we marked off on the 1 hour. It was that one. So this was a little move right at the open. Yes, that was right at the open. So that was your little Judas swing liquidity raid of the buy side. And then we got displacement to the downside, taking out the low. So that was your bearish market structure shift as well. And then it presented this 2-minute fair value gap. It was also visible on the 5-minute, I believe. And then as you can see, it came right into it. So whenever you enter on a fair value gap, your stop is always, so a fair value gap is a 3-candle formation, right? So 1, 2, and 3. And the fair value gap is the area. Just quickly go to the 2-minute. The 5-minute, I think the 5-minute shows it a little bit better. Okay, so a fair value gap is this 3-candle formation, and the fair value gap is the area in between candle 1 and 3 that was not traded through. So that's the fair value gap. Quickly use a different color for the 5-minute one. So your stop loss is always above the high of the first candle for a bearish fair value gap. So it came through. I took a little bit of heat on this one, but then luckily it dumped. So I only played it basically up until this level. I had my take profit right there for one mini on the Nasdaq, so that was good enough for me. I basically target the low hanging fruit in and out, and then I look for the next opportunity. There was also another setup that was during Danny's stream, and it was this one right over here. So we had to move into the buy side liquidity, then we had a higher low, and then we displaced past that low, and it created this little fair value gap, and then it entered, and then it dumped. So I got a little, I think I exited right on this one, and then it came back into that fair value gap, entered again, and then exited right there. So quickly go back to the Discord. So this is a new thing that I've been implementing on my entry model, is divergences on the Momentum Master Optima. And this one gave you a pretty good divergence on the 2-minute and the 1-minute. So it came into the fair value gap, went through it a little bit, gave you the divergence, so you could have entered off that divergence, and it actually created another entry model as well. You had a high, so buy side liquidity above the highs, So the buy side was taken. Over there you had a low, so it displaced past the low, created another gap right there. Make that red. And you could have entered off that fair value gap and then just play that towards that low as well. Target the low hanging fruit. So I didn't play this one, so I'm just pointing it out. So these are the things that I look for. That could have been another 40 points if you entered off the fair value gap. And then your stop, you could have put just above this high or right there. I would have placed it just there. Just risk as little as possible. Right, so that's a couple of setups that you could have played. So let's quickly go through the rules for the silver bullet entry model. Go back to the 5 minute. Okay, so let's create a little bit of space right here. Okay, so you are going to have to do everything exactly as I outlined it right here. So step number 1 is mark off untouched highs and lows on the 1 hour and the 15 minute time frames. Okay, so we'll get back to this. I'm just going to make this slightly smaller. Okay, so that's basically what we did this morning, right? So we marked off the untouched high right there and the untouched low. So these are the most obvious liquidity pools that they could have went for. Okay, so that's step number 1. Right, so step number 2 is wait for price action to enter one of the liquidity pools. Okay, so we just want to see price action go into either above the high or either above this low. Just dig into it to take out all of the stops above the high or below the low. So that's the next step. Okay, step number 3. Now you are gonna move to lower time frames. So as soon as you enter the liquidity pool outlined in step number 2, you want to go to the lower time frames, and that is the 5 minute, 4 minute, 3 minute, 2 minute, and 1 minute. And wait for a market structure shift. Okay. Let's move the text a little bit closer. And let me remove some of this. Okay, so right here, we moved into the buy side liquidity, and this was an obvious sign we couldn't displace above the high. We just entered in it, knocked out some buy stops, then started to move to the downside. So now we are waiting for that market structure shift, right? So we have to look for the very last higher low, and it was this one right here, right? So this was your very last higher low. So if we displaced past this low, that is a bearish market structure shift. And displacement, you also want to see the fair value gap. Okay, so wait for market structure shift. Then the next step is there displacement slash fair value gap? And then the next step is enter in the fair value gap. So you can put your limit entry right there with your stop loss above that high. So enter short here. And then, like we said earlier in the stream, the fair value gap is a 3-candle formation. If you go short, your stop is above the high of the first candle. Okay, so enter in the fair value gap. Stop above first candle high. Okay, so now you've entered, and so take profit is at the opposing liquidity pool. Okay, so that is basically the rules, and then the new step that I have added, which definitely gives a higher winning rate to the strategy. So optima divergence. And then the next one I'm gonna just call 5.1 because it adds to the optima divergence. So the divergence on 1 minute or 2 minute time frame. Do you want to see the divergence right there? Okay, so that's basically the step. So if we go down to the 2 minute, the 2 minute is what I use today. We'll see that divergence printing right there. So this is a hidden bearish divergence. You have a high and a higher high, and on price action you have a high and a lower high. So this indicates that the trend to the downside should continue, and that's exactly what happened. So let's go to the 5 minute. So the opposing liquidity pool is the one that we identified on the 1 hour chart, that one right there. And eventually it went to the sell side liquidity. But for me, like I mentioned earlier, I just exited right here, right there. So that was enough for me. That was about 40 points. So we got there, and I just took my profits and went to go do other things. So that's basically the rules. And then one more thing. I have this risk calculator that I'm going to post in the Discord. So what you can do is you can put in your equity for your account or your funded account. And then you can say, okay, I want to risk 2% per trade. So let's say, let's make it 1%. And if you have a setup and your stop loss is 10 points, and you have to put in the contract multiplier. So for the Nasdaq NQ, the multiplier is 20. For the micro, it is 2. And then for ES, it's 50. And the micro for ES is 5, right? So this is for NQ. The contract multiplier is 20. So if the stop loss is 10 points and we only want to risk 1% of our equity, then it tells us we can use 2.7 mini contracts. So you can round that either up or down. That is totally up to you. Or you can make the contract multiplier smaller for the micro. So let's make it 2 for the micros, and then you can use 27 micro contracts. All right, so that was basically the rules for the silver bullet. I just want to let quickly go to my other layout. Okay, so let's start with the analysis. Want to quickly clean up some of these things. Okay, so this is also what we mentioned in the Discord earlier today. I think we also mentioned it on the stream yesterday. But on the weekly chart, we had this imbalance. So the high of the imbalance is at 14,618. The low of the imbalance 14,244, and then the mean of the fair value gap is at 14,433. So it looks like the drawn liquidity for the weekly chart is towards this level right here, and there's also this one right here, so we'll have to see what happens once we get here. So I'm thinking maybe a move straight to the mid and then potentially a reversal. So we also have this imbalance forming right here, but we still have 2 days and 4 hours left for this to confirm. So there's still a lot of time for this candle to move over here and then potentially back up to reprice this imbalance on the daily chart. Oscillator is also starting to reset, but the Williams still has a lot of room to go down. So this is also confluence with the price action. Looks like this fair value gap is drawing in price action, and then at the same time the Williams will reset, gain strength, and then it can potentially push towards the imbalance in this area. Alrighty, let's go to the daily chart. Okay, so we came for the previous day low, but it doesn't look like we got a strong reaction to the upside from that level. So it looks like it definitely, in the shorter term, it looks like it is drawing towards these relative equal lows on the daily chart. This is where the sell side liquidity will reside. So I think this is, we could potentially still see this level today at 14,618, I think it is. Yes. So the money flow is still below, above the RSI. So we want to see the money flow reset below the RSI and then make a push to the upside. Okay, so I just want to see where we are in relation with the opening price. Okay, so we are below the midnight opening price and the 8:30 opening price. So normally kind of you want to look for longs below the midnight opening price and shorts above the midnight opening price. And this is where we took that short this morning for the silver bullet setup, and that was also above the midnight opening price. So this acts as a pretty good mean for price action without using any moving averages. There's not really any imbalances on the 1 hour. Go back to the 4 hour. Okay, so it looks like the 4 hour basically displaced below this low. So it is starting to create an imbalance. So if the next candle opens and it's also a down close candle, then there will likely be displacement visible in this area on the 4 hour, and then that will likely indicate that we will be seeing this move into the fair value gap on the weekly sooner rather than later. You see this also looks pretty bearish on the momentum master B. You see it couldn't even gain any upwards momentum, only had a little bit of upwards momentum before flipping to the downside again. And then the money flow, which is the yellow line, is above the RSI and away from it. So typically price action will want to reset below the RSI and then push to the upside again. Quickly have a look at the Williams, and the Williams is also pointing down. Okay, so also looking bearish on the 4 hour. Okay, so just on a smaller time frame, we took the sell side liquidity, which was the ultimate target for the silver bullet setup from this morning. Okay, so we took sell side, so it is likely we could see a move, a little bit of a move back to this area. Okay, so we have this imbalance on the 15-minute chart, and this imbalance is also in the premium area for this leg to the downside. $706. So we have this fair value gap on the 15-minute right above the equilibrium and just below the OTE. So this is a PD array in the premium area. So maybe for the afternoon we see a move right here. So let's quickly see what the midpoint of the fair value gap is. Okay, so midpoint is 14,700. So maybe for the afternoon, move back into this area and then continue to the downside. 15-minute. Most of the oscillators look like they are ready to make a little bit of a push to the upside. Money flow is starting to reset below the RSI, and there's 1 minute left on this candle. We want to see money flow reset below the RSI, and then they can push back to the upside. Okay, so if we push to the upside this afternoon, I'm watching for potential rejection in this area. So the lower end of the fair value gap is at 14,694, and the upper end of the fair value gap is at 14,711, and then the midpoint of the gap is at 14,702. Look at the 5-minute. Okay, so on the 5-minute, looks like it is getting rejected right at this imbalance, but it is creating these relative equal highs. So this will hopefully induce traders to put their buy stops above this area, and then we could see price action move up to take the liquidity pool above these highs, reprice this imbalance, and then we can look for on the lower term time frames for a bearish market structure shift, enter in a bearish order block for a fair value gap, and then run it towards this imbalance on the weekly chart. All right, so let's see what happens. It looks like we could see something like this: move above the equal highs, knock out the buy stops, reprice, and then come to the downside. Have a look at the 2-minute. 2 minutes still looks like it has some room to the downside. Could just, the 2 minute could just gravitate towards this area and then move to the upside and knock out the liquidity above these highs, reprice, and then move to the downside. That's the read that I'm getting right now. Let's have a look at the dollar index. Okay, so from last week, we said that it looks like the drawn liquidity is towards these highs, the buy side liquidity above these highs. So we broke past that, and as you can see, we are displacing above this high and past this volume imbalance. So it seems clear that the dollar index is drawing to either this high or that high. And then we also have the fair value gap on the daily that has been untouched. So this seems likely that it could go all the way to 108.444. The upper end of the fair value gap is at 109.452. So this is obviously not bullish for the risk on assets. So let's quickly go back to the Nasdaq. I don't know, maybe if the dollar index is gonna run that high, get a fib on this leg to the upside on the weekly chart. I mean, if the dollar is gonna push all the way towards that imbalance on the daily, then it seems likely that the Nasdaq could push all the way to the discount area on the weekly chart. And then we also have this imbalance right here at the equilibrium. So maybe it's just gonna move into this fair value gap and then kind of create an inversion fair value gap, which will kind of act as resistance and then move into the discount. I mean, there's a order block candle right there. Who knows? So we'll have to see. So right now the dollar is looking very bullish. So that is not going to be good for things like Bitcoin and other risk on assets. Alrighty. Just quickly recap the Nasdaq. Okay, I think this is still the likely setup for this afternoon. As you can see, it's not displacing above this low. So to me, it says that this is just a little liquidity raid. In order for it to go and raid the liquidity right here and reprice the imbalance before moving lower. So once we get into this area, then I'm going to be looking for that bearish market structure shift on either the 1 or the 2 minute, and then enter on that fair value gap and then run it towards the high of the weekly imbalance. All right, that's it from me for today, guys. I will post this setup if price action moves into this level and we get that market structure shift. I will immediately post this setup in the Discord as well. So the link is in the description if you want to join us in there. All right, and then with that being said, thank you for everyone that joined today. I will see you guys tomorrow and later in the Discord. Until next time.